This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. I'm John.
And I'm Mary. It is Thursday, July 23rd, 2026. Here is your daily look at the news. We skip the noise and focus on the forces shaping our world, who actually benefits and why.
Let's start with a massive move in the tech world. Alphabet, the parent company of Google and the absolute giant of digital advertising, just dropped $94.1 billion on SpaceX.
That gives them a 6% stake in the newly public rocket manufacturer. According to the Wall Street Journal, $80 billion of that is tied up in short-term restricted shares. Another $14.1 billion is locked in through 2027.
This reveals the real endgame for big tech. The era of just building software platforms is over. To stay on top, tech giants need to own the physical infrastructure of the future.
Think of it like a digital shopping mall. Google doesn't just want to own the stores anymore. They want to own the literal highways leading to the mall. By grabbing a huge piece of SpaceX, Alphabet gets a massive anchor in orbit.
And look at the incentives here. If Alphabet tried to build its own satellite internet network to rival Starlink, they'd face brutal competition. Plus, they would invite a ton of government antitrust scrutiny.
Exactly. Instead, they just buy into the dominant player. They capture the financial upside of space without the regulatory headache.
So why does SpaceX agree to this? Because colonizing Mars and blanketing the Earth in satellite internet takes an unbelievable amount of cash. Only a tech giant with massive reserves can shoulder that kind of long-term risk.
Moving to the global economy, we are seeing a big sell-off in United States Treasury bonds. The yield on the 10-year Treasury note, a key benchmark for global borrowing costs, just hit a high for 2026.
Normally, when borrowing gets that expensive, stock markets panic. But analysts are actually urging a positive outlook on the S&P 500. That's the financial index tracking the 500 largest companies on United States stock exchanges.
Why the optimism? Because of corporate earnings. This shows a massive split in the economy. The biggest, most dominant firms make so much profit that they are basically insulated from high national borrowing costs.
The little guys struggle to get a loan. The big guys fund themselves.
Spot on. Over in India, we are watching a totally different kind of resource flow. Thousands of Gen Z protesters have taken to the streets.
Protests often burn out when people get hungry or tired, but this one has serious operational endurance. Why? Because of widespread civic backing.
Bloomberg reports that Bollywood figures and Sikh temples are supplying the protesters with food, shelter and medical aid. This cross-class support is the fuel. It gives young people the resources they need to keep pushing back against institutional bottlenecks.
Let's turn to Europe. The United States government is playing hardball for Silicon Valley. United States Envoy Warren Stephens is threatening tariffs against the United Kingdom over proposed tech taxes.
Donald Trump and United Kingdom Prime Minister Keir Starmer recently held bilateral talks. During those meetings, Stephens called a proposed United Kingdom social media ban draconian regarding free speech.
This is a classic power move. The United States is weaponizing state power to protect its own tech monopolies. They are linking physical trade tariffs to digital rules.
But from the American perspective, unilateral digital taxes in Europe are basically unlegislated tariffs targeting United States firms. So Washington is stepping in as a shield. If you raise costs on American software, the United States will raise costs on your physical exports.
Meanwhile, in Germany, the housing market is hitting a wall. The IFO Institute, a major economic researcher in Munich, and the European Euroconstruct Research Network just released a grim forecast. They project German housing completions will drop to just 185,000 units this year.
The capital has simply frozen. Builders are squeezed by persistent inflation in construction costs. On top of that, there is massive geopolitical fallout and economic uncertainty from the ongoing Iran war.
Speaking of Germany, the government is shuffling the deck. Nina Warken is taking over as head of the Chancellery, and Carsten Linnemann is the new health minister for the CDU, Germany's main centre-right party.
Command changes are happening in Ukraine too. Following public protests over wartime stability, Ukraine just replaced its army chief. Mikhailo Drapati is taking over for Alexander Sersky.
Down in Italy, the government just finalised a new auto-social leasing scheme. According to the financial newspaper Il Sole 24 Ore, this decree lets citizens lease a car for a flat fee of €100 a month.
On the surface, it sounds like a great deal for drivers. But follow the money. The state is directly subsidising consumer demand. This is basically a massive pipeline funneling taxpayer capital straight to domestic Italian car manufacturers.
Finally, a quick note on the climate. Extreme temperatures are baking southern Europe right now, and thousands are fleeing severe wildfires in France. The physical costs of extreme weather are only going up.
Taking the temperature today, physical control is the new software. Whether it is Alphabet buying a massive toll booth in orbit, the United States using trade tariffs to shield its digital empires, or Italy funneling tax money to car makers, the biggest players are locking down hard assets. Capital is flowing where the foundations are strongest, leaving everyone else to deal with the rising costs of building and borrowing.
If you found today's breakdown useful, let us be your smart friend on the go every morning. You can subscribe to The Gist's daily newsletter for free. Just tap the link in your show notes.
Thanks for listening. We'll catch you tomorrow.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.